Wow. Okay, guys, what a day for NIO stock. This was one of the craziest trading sessions I've seen in a while. It just seems like NIO, Solo, Li Auto, Fisker, uh, even Xiaopeng, Xpeng, all of these stocks were just moving crazy today, but especially want to key in on NIO because I think NIO took the biggest hit out of all of them. And I'm going to explain to you guys why NIO stock fell and where I think the price is going in the future as we head up into earnings on November 17th. Before I get into this video, guys, please smash the like button. It really helps. So, to give you guys a quick update on what's going on, NIO looked like in the morning session it was headed towards perhaps even 55, even $60. I mean, this stock is on an absolute tear. If we just step back for, just a month or so, and we take a look at the monthly chart here, we can see that the stock is up 69% over the last month. So a lot of people have been riding the momentum, and the volume on this stock is absolutely crazy. I believe it was over 500 million shares traded today. It seems to be the number one stock that everyone's talking about. So I'm gonna give you guys some information on why the stock went down today, and I'm also going to let you know why I haven't really been recommending it much on this channel, because I believe that the stock was completely overbought and completely dealing with FOMO, fear of missing out. So let's give you guys the update on really what took place today. So as you can see, here's an article on Business Insider. It says NIO tumbles 14% after renowned short sellers. Citron Research makes a bearish call, citing increased Tesla competition. So the story behind this guy, Citron Research, it's led by a guy called Andrew Left. He's 50 years old, and he's a notorious short seller. What a short seller is someone that profits when the stock price goes down. So what he did is he published a report on his website talking about that the stock was completely overvalued. They're facing competition from guys like Tesla, and that he thought the target price was around $25. So as you can see here, just to sum up the article, it basically says that rally took a pause on Friday, with NIO dropped as much as 15% in Friday trades, as Andrew Left of Citron Research said in a short seller report that EV company is poised to crash 48%. Left expects increased competition from Tesla to prohibit growth for NIO, as the made in China Y model could be priced competitively relative to NIO's offerings. And he said, quote, NIO has found itself in uncharted territory that can never be justified by its current standing in the China EV market or near-term prospects. So guys, what's been going on with NIO? Well, I believe that, obviously, I don't think that NIO stock is worth $25. I think that's way too bearish, but he does have a point on the price and the recent volatility. NIO right now is trading at a market cap of about $48 billion, and it's trading at a ridiculously high price to sales ratio. So price to sales ratio is the ratio that I like to look at when a company is not profitable. So for instance, companies like NIO, Li Auto, Xiaopeng, Xpeng, these are basically the three biggest Chinese electric car stocks, and none of them are profitable. So we can't use a PE ratio, which is a price to earnings ratio. It lets you kind of see how much money, how many years it's going to take for you to get back your investment. So for instance, right, if you have a price to earnings ratio of like 10, that means that it would take around 10 years for those earnings to equal the stock price. That's on a per share basis. So it's a similar thing with the price to sales ratio. How many years will it take of revenue to get back, to reach that same value on a per share basis? So if we take a look at NIO, right, and NIO is very interesting here. So if we take a look at NIO, now these numbers are a little outdated because it was a huge rundown, but as of Friday, NIO was trading at a price to sales ratio of 43. And that's a ridiculously high number, because if we take a look at Tesla's price to sales ratio, we can see that it's much lower. Okay, so Tesla is trading at a price to sales ratio of 14. NIO's trading at around 45. So right there, it looks like those price to sale ratios are a little bit out of whack for NIO. I think a lot of people have been for NIO basically just buying the stock because everyone else is buying and it's going up, and assuming that the earnings are going to be phenomenal. But the reality is that NIO isn't near close to being the leader in delivering vehicles in China, as evidenced by their October delivery report. So if you take a look at that, we can see here in automotive world, it says NIO Inc. provides October 2020 delivery update. So the company delivered just over 5,000 vehicles in October 2020. So the company is experiencing 100,000, 100% year-over-year growth. But as of October 31st, the company's delivered just 63,000 vehicles. So I think that this type of market cap, this type of market cap for a company that's delivered around 63,000 videos, it leads me to believe that the stock is quite overvalued. So obviously a lot of this run up was fear of missing out. People were jumping on board because NIO's going crazy. The volume is crazy, but that doesn't mean that this is the best time to buy. So the reason why I say that is because I like buying stocks like this on dips. When you're trying to chase the price and buy it because it's going up, you're kind of missing the correlation between what the business is doing and the stock price. So what you want to focus on is business performance, then stock price. But if you focus on stock price first, you end up ignoring business performance, and then that can cause you to overpay. And then, for instance, let's say people that bought it over 50 thought it was going to 60, and then now you're down, now you're down 10, 15, 20% on your position, and you're kind of scratching your head saying, what happened? Well, this is exactly what happened. So emotions are controlling this market right now, and it's kind of getting out of line with reality. So now, moving on to the whole reason why the short seller said it was overvalued. If we head over to Citron Research and check out the website, we can see here that he says that there's a $25 price target. Now, obviously, guys, I'm not going to go into this full report here. It's basically calling NIO a shell company, say it doesn't have real sales and things like that. So obviously, he has a financial incentive to attack NIO stock. He wants the stock price to drop because he'll make money as a short seller once he's able to buy back those shares cheaper. So for, basically his goal is to basically, short this stock. I guess he was shorting it when it was near $50, and hopefully it'll go down to $25. So I don't necessarily think that NIO is going to drop down to $25. And the reason to give you guys that, I wanted to show you guys some technical analysis. So now I was giving you guys the fundamental side of the business side. Now let's drop into the technical side. So if we take a look here at one of my favorite technical analysis tools called TradingView, we can see here that I always use the 20-month moving day average. It's just very simple and easy to understand. You guys can use it too. It really helps me clarify where a stock is moving. So I always use that as support. So as we can see here, the 20-day moving average on the year-to-date chart is about $34. So for me, I would say even $44, $43 is too expensive for NIO stock. Even though it's heading into earnings, obviously it could gap up with an excellent earnings report, but I still think the stock is going to fall a bit down, come back down towards 35 or so. It's just simply run up too fast. So, and if you can see here, the volume has been absolutely ridiculous. The volume on Friday was 578 million shares. That is an all-time high. So the second highest volume day was back in July 8th, and that was 570. So we have an all-time high volume day. A lot of people selling off the stock, dumping the stock, mostly likely due to the research report, but also profit taking. I mean, the stock has moved up so fast. It was only a matter of time where people that bought in here right before that massive run up, so then maybe they bought it right around 14 or 15, 20 or something like that, and went to 50, decided to take some profits off the table. So now I'm going to give you guys where I think the stock is going to head into the future and give you guys some tips on what to do up until earnings. So obviously we want to have a long-term mindset here. If you're just trading the stock just to make money, then this really won't apply to you. But for people that are long-term holds, NIO is a real company. They have real products, and people like those products. And although they're not necessarily the leader in China when it comes to deliveries, I think they're gaining momentum. And they have the NIO concept. It's more of like a country club type concept. When you own a NIO car, you gain membership into an exclusive club. And I was reading and watching a lot of videos that a lot of people buy the car just to get access to the club environment, to be able to have friends to hang out with and interact with like-minded people. So basically NIO is trying to build a cult-like culture, and we all know that cult-like companies, Tesla, Apple, Amazon, Google, these companies do very, very well over the long run. So my price prediction in the short term, I think NIO is going to continue to sell off for a bit, perhaps moving into Monday's session. Tuesday is really the big day where we kind of find out what's going on with earnings. But up until then, I think NIO is going to have more selling pressure. But long term, I think there isn't any reason why NIO can't easily become a $100 stock. I think moving into 2021, because I think that's when you're going to really see an explosion in EV sales. This is just the beginning. This is just the brink. Deliveries are starting to increase, and people are starting to get more familiar with the company, and a lot of people are still on the fence about electric vehicles. A lot of people are kind of doing their research and things like that. Next year is the big catalyst. That's when you're going to see electric vehicles really hit the mainstream, and people are going to be talking about and bragging about how much money you're saving, how efficient the cars are. So I think that if you're a long-term NIO holder, I think you can ignore this noise. Hold on, and definitely, I think NIO stock will be trading at much higher levels in 2021. But if you're short-term trading here, this is a dangerous situation, because when reports come out like this and emotions hit the market, these stocks can plunge and they can fall pretty fast. So that's one of the reasons why I wasn't recommending NIO as a strong buy. I didn't see a correlation between the business performance and the current stock price. But the November 17th, when earnings hits, that'll give us a lot more clarification. But right now, I think based on the price to sales ratio, based on the fear of missing out, based on all the hype surrounding around NIO, basically a lot of people buying it simply because they want the stock price to go up, not necessarily because NIO is keeping up. Their revenue is keeping up with the demand in the stock. I think that right now a safe price target would be probably I would say near this 20-day moving average level, or $35 or so, perhaps even $30, because I remember $30 was the latest offering around there. It was the latest offering and a key support level. As you can see here, we have plenty of support right here at around $30 or so. So I would say be prepared for a little bit more volatility in the short term, but long term, NIO, Li Auto, Xiaopeng, Tesla, all of these stocks are going to do very, very well long term. So that's just my take on this. So if you guys enjoyed my video, please smash the red subscribe button. It really helps out the channel, and you guys get updated when I produce more videos. So that's it. Until next time, guys. Take care.